Welcome back to my channel, guys. My name is Alejandro Romo, and in this channel we talk about investing, personal finance, and all things money. In today's video we're going to be talking about FHA loans and what they are and the details behind the FHA loan. So stay tuned.
I want you to deal with your problems by becoming rich.
Before we get further into the video, make sure you drop them likes, comment, subscribe, hit the notification bell, and without further ado, let's get into the video. So as you can see, I'm looking a little different, a little professional, hair combed over, got my Berkshire Hathaway name badge. Yep, your boy is a realtor right here in beautiful sunny California, Los Angeles. This is gonna be my first real estate related video. I'm gonna be making more videos like this in case you guys have any more questions about buying a property or anything about real estate related. So just stay tuned, more of these type of videos to come. Let's get into this video. So you are trying to finally buy your first home. You may come across a couple different loans, and the most common loans that you can come across are conventional and FHA. Depending on a few factors, FHA might be the best option for you. For those of you that don't know, an FHA loan is a loan that is backed by the Federal Housing Administration. It is a government agency that was created in 1934 by Congress. These loans are insured and they're meant to help FHA lenders in the case that you may default on the loan. Because lenders are protected, they can afford to be more lenient about the loans that they give, meaning that they can give loans more to people with low credit scores, with higher debt to income ratio, and other factors. This is the reason why you are more likely to get an FHA loan than a conventional loan. There's two options to do an FHA loan. The first option you have is if you have a credit score of 580 or higher, you're able to just put 3.5% down as a down payment for your home. If you have a credit score that's between 500 and 579, then you would have to put a 10% down on your FHA loan. As mentioned before, for FHA loans, lenders can be a little bit more lenient on your debt to income ratio. Basically what debt to income ratio is how much you have in debt to how much you make. You need to be no more than 50% on your debt to income ratio. It is pretty easy to figure out your debt to income ratio. The way you figure out your debt to income ratio is by adding all your monthly expenses in debt and then dividing that by the amount of money that you make in a given month. So I'm going to give you an example of a debt to income ratio. So let's go right here on my calculator. For example, let's say you make $3,000 a month, but you spend $2,000 a month on all your bills, whether it's like your credit cards, your rent, your car note, whatever it may be. So let's say $2,000. So you would put $2,000 and then you'll divide it by the $3,000 that you make. That's a 0.66%. If you were to have this scenario, you would not be able to qualify for an FHA loan because it's simply too high for your income. Now a good example would probably be, let's say you make $3,000 and you only pay $1,000 in debt and stuff. Okay, so let's do 1,000 divided by 3,000. That will put you at a 0.33%, and you will be able to qualify for an FHA loan because you're at 33%. So again, past 50%, you do not qualify for an FHA loan. In a conventional loan, you get something that's called a PMI, which is private mortgage insurance, if you don't put more than 20%. In an FHA loan, you always get charged with something called an MIP, which is a mortgage insurance premium. So for the mortgage insurance premium, there's two fees that you have to pay when getting an FHA loan. First, you have to pay what's called a upfront mortgage insurance premium, which is 1.75% of the loan amount. So the second part is you have to pay for your mortgage insurance on a monthly basis as well, and that comes at another 1% of the loan, broken down into monthly payments. Again, like I said, you have to pay an upfront mortgage insurance premium, which again was 1.75, and this amount is added on top of the loan, so you end up paying for this part of the mortgage insurance throughout the whole life of the loan. Another requirement that is needed for an FHA loan is you have to have closing costs. The same like in a conventional loan, the closing costs can range anywhere between 2 to 5%, and that really just depends on your escrow and your inspection, your appraisal, the title, and all that stuff. And again, it ranges anywhere from 2 to 5%, mostly always closer to 3%, but again, that can be discussed with your lender. One of the other final requirements is you need to make this home your primary residence. This cannot be an investment property, this cannot be your second home, and it has to be your primary form of residence, and that's it. One of the pretty awesome things about an FHA loan is if you do decide to get investment property, it has to be a like duplex or a triplex or a quadplex, and FHA loans work on these type of styles of homes, and that's pretty awesome. The only catch with this is you do have to live in one of the other properties. So if you get a duplex, you have to live in one and rent out the other one, and that's fine. So obviously, depending on your credit score, income, down payment, and city, state, and county that you live in, that will determine how much mortgage you qualify for. So for example, I live here in Los Angeles, California, and according to the Housing and Urban Development right here on the HUD.gov website, I'm gonna leave a link in the description for this in case you want to know what you guys would qualify for and what type of home you guys buy. So going right here, so Los Angeles County, if I am buying a single family residence, the FHA can only extend up to $765,600 for your loan. And going up to a fourplex, if you get in a fourplex, then for the FHA you could only qualify for $1.47 million for a fourplex. So that's pretty cool, knowing that you can get up to a 765 FHA loan. But yeah, that's Los Angeles. Again, I'm gonna leave a link in the description for you guys to check this all out. So I'm gonna give you guys an example right now of how much you would need to close on a FHA loan home. So if you're looking at a home that is $300,000, you need to multiply this number by the 3.5%, and the way you do that is you hit multiply 0.035 equals 10,500. This is just for the down payment of the 3.5%. So now what we're gonna do is we're gonna subtract 10,500 from the 300,000. So let's go 300,000 minus 10,500. That equals $289,500. So the next thing we need to figure out is the closing cost. The closing cost isn't at the 300,000. You do it off of this number because this is what you're being lent by your lender, not 300,000 because you have a down payment. So let's use 3% for closing costs, and then almost the same equation. So times 0.03 equals $8,685. So that's what you would need for closing costs. You're also going to be asked by the lender to pay for an appraisal. The reason you need to have an appraisal done is because the lender wants to make sure that they're not lending you more money than the house is worth, and this has to come out of your own pocket. Roughly on average, I've heard appraisals around $500 per appraisal. So let's use that as a number. So we're gonna add that to this right here. Let's go plus 500. We're at 9,185. And the second thing that you need to pay for, well, you don't have to pay for it, but I highly always recommend that people do this, is an inspection. The reason you want an inspection is you want to make sure your house is up to standards. And I mean, you don't want to move into a home that you think the roof is okay, and then 1 year into having the home, the roof caves in. So that again is roughly about another $500. So let's put that into the equation. Plus $500, 9,685, and let's add the down payment to this amount. So the down payment again was 10,500. You come out to a total of $20,336. So that's how much you would need to close on a home. And again, that just depends if you don't get in a bidding war with somebody else. If you get in a bidding war with somebody else, then that number is just gonna add up. You know, so if they outbid you by $2,000, then you're gonna have to put a higher bid. So yeah, that's a rough estimate of how much you would need to buy a home. That's $300,000. Alright, so I showed you guys how much your closing costs will be if you were trying to do an FHA loan. Now I'm going to show you roughly how much your monthly payment would be on that home. So I'm going to go right here on FHA.com and I'm going to use their mortgage calculator. So we're going to use the same example. Let's go right here. 300,000 at 3.5% interest rate. To find out your interest rate, I'm gonna leave a link in the description for that. And we're gonna go right here to NerdWallet, and you'll just put in your zip code. I'll just type this in right here, and then we're off right here. Scroll down to the bottom. Right here you see it's about 3.9%. So I'm gonna use that in the calculator. Let's go right here. 3.9. Property tax. Let's go right here to this tab, smart asset. Again, all of this is going to be in the description. You'll just put in your zip code by the assessed home value, the actual value of the home. And in Los Angeles County, you got about 0.75%. So I'm going to use 0.76 on the calculator. So 0.76. And homeowners insurance is kind of like full coverage insurance that you get on your car. You don't have to have it, but you have to have it if you still owe money on the house. And I'm gonna leave it at that 0.3% because it really depends on what coverage you have, what your deductible is, and all that stuff. So we're just gonna go with that 0.3%. And if we go down all the way to right here at the bottom, your results are, you're going to be paying roughly $1,836 for a $300,000 home. Not bad. Alright, so I kind of gave you a brief summary of what an FHA loan is, what you need for an FHA loan, closing costs, and your monthly payment that you would have for your FHA loan. I'm a licensed realtor, and I'm not the smartest, most educated one because I'm fresh to the crowd, but I'm here to serve you guys if you guys need any help with real estate needs. Just like my friend Ricky Caruth says, let me know if there's anything in the world I can do for you, and I'm here for you. Until next time, let's get this money. Peace.